Finance New Orleans Board of Trustees meeting roll call. Chair Edgar Chase IV. Vice Chair Andronika Morris.
Present.
Secretary Treasurer G. Wade Wooten.
Present.
Board Member Giselle Johnson Banks.
Present.
Board Member Charles Brown. Board Member Stephen Smith. Board Member Hunter Thomas.
Here.
A quorum is present.
Thank you all.
I just got a text from Chair Chase.
Okay, go ahead. He's coming.
I just got a text from Chair Chase. He'll be joining us in just a few minutes.
So do we want to go ahead and just get started or wait for him a few minutes?
Go ahead and get started, Ms. Morris. Thank you.
Okay. Okay, well, let's jump right into it. We don't have any old business today, and we do want to move to approve the items on the consent agenda, which includes the board meeting minutes the meeting minutes from our board retreat on November 8th, the meeting on the 22nd of November, and the committee meetings from October 19th and November 10th. If everyone has had a chance to review those documents, I'll entertain a motion to approve all of the consent agenda items.
So moved.
Thank you, Commissioner Banks. Can I get a second?
I second.
Thank you, Commissioner Thomas. Motion's been made by Commissioner Banks, seconded by Commissioner Thomas. All those in favor of approving the consent agenda items signify by saying aye or raising your hand on the Zoom.
Aye.
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 Any opposition, say nay. Any opposition? Okay, consent agenda is adopted. Thank you very much. Moving into the next item, I think we were jumping into it right there. New business. We have 50 minutes for new business. Oh, we're going straight to finance. Gotcha. Sorry. I'm reading it exactly. So we're going to move into the finance committee report. And I think we're going to have staff take point on that one today, if I'm not mistaken, because we are looking at our budget.
Yeah, and I'm sorry, Board Member Morris, before we jump in, Chair Chase is on the line, but he needs to be moved over to a panelist.
Okay. As soon as he's here, I will yield the floor. I will yield the meeting to him. There he is. I see him waving.
Hey, I just promoted him. He should come over in a second.
Vice Chair Mark.
Yes, sir.
I'm here. If you don't mind, could you can we do that?
Sure, I can continue. Yes. Thank you for we'll keep at it. All right. So we're noting that Chair Chase has joined the meeting. So for the record, but I'll continue chairing the meeting at his request. So we're moving into the Finance and Investment Committee report. And the first thing that we're going to be talking about is the budget. So again, staff, I believe, is going to be taking the lead on this piece. Commissioner Wooten, if there's any point that you want to chime in or anything in particular you want us to hear, please chime in. But otherwise, I'm going to turn it over to the team to get to their presentation.
All right. Thank you, Ms. Morris.
Sounds like everybody's agreeing to that.
Yeah, thank you, Ms. Morris, and good afternoon, board members. So we will look at the budget, which you see on your screen. is the final pass of the FY22 proposed budget, in which we're asking for approval today from the board. This budget has minimal changes from the previous several passes that was presented at the board retreat and most recently. So, and even from the first iteration. The only change we've made from the previous budget that was presented, and that was based on feedback from the board, is an increase in the capital expenditures line. So there's an increase from 70,000 to 140,000. And that 70,000 increase is for us to start the repair and the renovation of our Baron Street location, which we're targeting to move back mid-year. And we do have some immediate issues we need to address as a result of the hurricane. But as you're aware, we do have a larger investment needed to get the building fully renovated and upgraded to our liking and in tune with our, sustainability mission. So we're working on the overall strategy, but in the meantime, we just need to start eating at this elephant and taking one bite at a time and get that process moving. We also know there's a benefit of getting it started so we can mitigate the cost of, the leasing space and make that investment in our property. So, but that's the only change from the previous iterations. So this budget is 2.3. We have total revenues of 103,000, which is almost double from our previous budget last year. The allocation from reserves is 1.5. That's roughly 23% lower than what we budgeted last year. So this overall budget is 2% on the expense side, 2% lower than what we had last year as well. If we look at the second page, this is just another glance at our expected break-even point, which is 2026. So nothing changed from the last report on this. Just as a reminder, this is a very conservative forecast right now. It's based on the programs we have actively, active today. As we continue our research and development and add on more programs and scale up our existing, these projections will change. And I believe, I assume it's going to be for the better based on, what we have going now. So I'll provide updates regularly. So this will be something that'll be included going forward. It's very fluid, so it will be changing, and I'll make sure I make the changes. So this does assume a $10 million low cost or no cost equity injection over the next 10 years. That's budgeted at roughly, forecasted at $1 million a year. So that is included. We do on the debt side, we're still working through, our approach on the debt side. And so we'll, that'll be, included in the updates with these projections as well as we move through and get the wheel. But we already got the wheels turning on that. So we've already got a head start on the year on assessing the both the debt and equity side. But we're pretty comfortable, confident that from the equity side, we can achieve at least that 1 million a year. Next page. So this is being presented, and this is a request made by Ms. Morris and the board from our last month's meeting to provide kind of a projection on our cash and cash projections, which, as you can see, the green bars is our cash in, the gray bars is our cash out, and then the dots is our net cash. And so the line at the top, the blue line, just shows our cash and how it scales up. So what this says is basically we're estimating a 9.6 cash balance at the end of 2021. And as you can see, we kind of, as we rev up, we're scaling down a little bit in cash, but as we get to that break-even point, we start to scale up. And once again, this is based on that the active programs and conservative approach. So this will be updated as well. So that concludes my report. I can entertain any questions, but I would recommend to the board approval of the budget thereafter.
Sorry, Byron, I was double muted. So thank you, first of all, for providing this analysis that I did indeed ask for. I appreciate it. I know it was extra work, and we're mindful. We'll always try to be mindful when we ask the staff to do things beyond the original scope. But I think it's also helpful and necessary when we're having these conversations so that folks really do understand. You know, they have questions, and I think this eases some of those any concerns, and again shows that you guys are being, we are, not you, because this is our responsibility as well, that we are being good stewards of these resources, and seeing it in black and white and color is very helpful. So, board members, first of all, if you want to have Byron go back, I know folks have got the packet, but it might be easier to see it. So if you want Byron to go back to a slide or something to ask more questions, please let us know, and he can do that.
Mm-hmm.
But also let us know if you have any other questions. Giselle?
No, thanks a lot, Chair Morris. I was just saying that I appreciate the presentation. I was able to review it in detail. And so I really appreciate the work that has gone into it. Byron, so really, really good. I'm happy that I see the break even analysis at a certain time. And so that's really satisfying to see. So I appreciate the work.
No problem.
Does anyone else have any other questions, comments for the staff?
I think I'm good.
Anybody else? Wade? I know you've been in the weeds with this.
Yes, no, I mean, I was impressed with the analysis and the responsiveness of Byron and his crew. I mean, we talked about it at length at the finance committee the other day, just kind of teasing some of the information, trying to better understand it. No, I'm comfortable with the assessment. I mean, you know, if it's a best guess of what the needs will be, and if there's overages, then we just have to circle back and tackle it at that time.
All right. Well, I think it would be appropriate to entertain a motion to approve the budget for 2022.
I'll make that motion.
Thank you, Commissioner Wooten. Can I get a second?
I'll second.
Motion's made by Commissioner Wooten and seconded by Commissioner Banks. All those in favor of approving the 2022 budget for Finance New Orleans signify by saying aye.
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 Aye. Any opposed? Well, wait, did we get all the ayes in? Yeah. Any opposed? Hearing no opposition, the budget is adopted. Thank you all.
Thank you all. Mr. Wooden, you want to take this? Oh,
I do. Give me 1 second. Just getting set up. So I think we're going to start on pages 5 and 6 of the packet with a slide. Okay, thank you. So first, we'll focus on the global end of things. Markets have been mixed as investors assess risks surrounding the Omicron variant and determine what's going to be in the final Build Back Better bill and when it will get passed. Inflation remains elevated through November. The most recent headline inflation figures came out in at 6.8%, which is the highest level since 1982, unfortunately. But it's in line with expectations, but still elevated. Federal Chair Jerome Powell has had a change of tone. As you've probably heard for months, he and the Fed have been saying that inflation we've seen has been transitory. He suggested that the word transitory be retired when discussing inflation, unfortunately. Again, inflationary pressures continue and they're more persistent than what was originally expected. Excuse me. It's expected, but not certain, that the Fed will begin its rate hike next year, perhaps bringing the Fed fund rates to the 2.0 percentage range. And then Democrats are looking to take up Build Back Better bill before December 25th, but it's starting to look unlikely as they don't have the necessary votes to even start the debate yet. Let's see, rolling to the rates. Yeah. Excuse me, allergies. Bond rates were mixed during the month. U.S. 10-year Treasury yield decreased by 5 basis points, BPS short, to 1.50 month over month, with a slight increase at the shorter end of the yield curve. The munis, the muni yields, AAA, MMD, decreased by the 5-year part of the curve by roughly, again, 5 basis points. Mortgage rates have moved sideways over the last several weeks as the market awaits new information on the COVID-19 Omicron variant. Locally, the New Orleans metro area gained 9,400 jobs over the year through October to slightly over 500,000, so 531,300. That's excellent news. The unemployment rate in Orleans Parish was 6.5% in October, down from 7.9% in the prior month and down 12.3% from last year. So that's good news as well. Let's see if we can turn to slide 7 with regard to the financial status report as of November 2020 year to date. So sorry, I don't have COVID, I promise you. Okay, so this page provides a comprehensive view of year-to-date revenues and expenses. Overall revenues year-to-date were 119,000 versus a budget of 368,000. The shortfall is driven primarily by multifamily income. The Finance Authority does expect to close on 2 of the 4 pilot projects recently approved, which will bring us closer to budget for the year. The remaining 2 approved pilot projects are expected to close in January. Be a busy January. On the expense side, we're favorable to budget by 397,000 year to date, with actual year to date expenses at 1.6 million versus a budgeted of 2.0 million. Again, primarily favorable in all categories. Page 8, please. This page provides the 13th month trend of revenues and expenses. Both revenues and expenses for the month were in line with year-to-date averages, and expenses relatively unchanged from the prior month. Page 9, please. This is a balance sheet year-on-year comparisons, and again, the sheet composition is fairly consistent, and really nothing material to report in that respect. Page 10, please. Pathways, this is a snapshot of Pathways revenues and expenses, with total revenues at 2,000 year to date, expenses at 39,000 year to date. And then slide 11, please. Our cash and cash equivalents were at 9.5 million at the end of November. which is lower by 118,000 versus the prior month at 9.6 million. So down, yeah, 118,000. And that concludes my portion of the report, and I will yield it to, I'm not sure to whom. Byron, did you have any comments?
No, great job.
Yeah, thank you, Byron.
All right, so that does anybody else have any questions for the Finance Committee? All right, well, we'll move on to the next item in the agenda, the Programs Committee report. And so I'll take you guys through that. We're going to get the dashboard up in a second. Thank you very much. So jumping in, we're still on schedule to close, as you heard from Commissioner Wooten. Well, we'll start with the community fund. There's been no activity this month for the community fund, as well as no activity with Own New Orleans, and no closings in this month for the Green Mortgage Program. We will be staff will be starting some more aggressive marketing in January, so we expect that to have some impact. The highlights here, you actually have heard some of it already from Commissioner Wooten in the finance report, seeing the impact on the closings that have shifted a little bit. So we're still on schedule to close H3C, which I asked the staff to tell me exactly what that meant, which is Health, Community, Culture, and Commerce, H3C, and the reveal by the end of the year. H3C has scheduled a closing for the 20th, next week, and the reveal is expected to close the end of the week of the 27th. Fun fact for everybody, the reveal is actually a project that we have stepped into to close some financing gaps that is complete. So as soon as they get COO, which will be soon, and the financing goes online, about 150 units are going to come online very quickly. And so that's really something to celebrate, that Finance New Orleans is having such a positive impact, able to support projects at various phases. And so the staff are to be commended for the innovation and keeping their eye on the ball with this kind of stuff. The Christopher Park and Grove Place projects have been pushed to 2022. I'll talk a little bit more about why. Christopher Park is an incredibly complicated deal. It's actually set up as old business on the program committee, so we can get some reports about how it's moving. There are a number of parties involved. It's layer upon subsidy. It's former public housing, as well as our investments, tax credits, the whole shebang. So that's one of their issues. Grove Place is also a tax credit project, and they've had to go back to the LHC to work on some of the changes that they need. And the good news is that those changes are what we accounted for in our underwriting, so it shouldn't cause any delay on our part. But they do have to get the final blessing from the LHC. So we expect to move 3 more projects. To hear about them at the program committee meeting in January. They are called Barone Villas, Our Lady of Lourdes, and 4528 Ferret Street renovation. Barone Villas and Our Lady of Lourdes are both pilot and bond transactions, and 4528 Ferret is a mixed-use home ownership / condo and commercial project. So we're gonna, again, diversity, innovation, and impact is the name of the program's team's game. One thing that we talked about on the program committee meeting is making sure that the pipeline reports, the staff have done, again, really great jobs of putting together documents above and beyond their initial offerings in response to what board members are asking for. The pipeline report, you got to check it out, has continued to improve, and sometimes at our nudging, and also sometimes at the staff thinking of it a little bit differently. So now you can go in the pipeline report, board members, and see a summary of the project. So if you want a little bit more detail, than what's on the spreadsheet, you can get that. That document's going to be updating. So we expect people to be able to keep abreast of it. But despite that, the fact that there's going to be even more information sharing and board members that can be better prepared, the staff are going to keep to the schedule, right? Where we can talk about these deals, discuss them at program committee, and that program committee will, before it comes to the final board approval, that is going to be, it's going to be recommended for approval a full month ahead. The staff have committed to try to keep to that schedule as best as possible. Obviously, sometimes things happen, which is why the pipeline reports are so important, but we should have an indication, and the board, you know, and again, we haven't had that happen where the board members have approved a project that we've never seen before. One of the things that's happened is the final approval of the board has not been able to be that full month apart. And again, not oodles and oodles of time. But because, and again, the point is that these are, once it comes to a final package, they're very complex documents that we want to make sure that we understand and can review and have the time to review. So we're going to do our best to keep that schedule for the new year. And so, yeah, so that is all we have for the programs committee. Does anybody have any questions?
This is Wade. I had a question.
Hey.
Tangential. I saw in the news yesterday that the city council just approved, it was like a zoning ordinance change with regard to multifamilies.
Right, text amendment, yep. Mm-hmm.
Yeah.
It was for small multifamily. So this is a part of, from the advocacy work, the smart housing mix, which is this overarching strategy to talk about more affordable housing, particularly putting more incentives and some requirements. And FANO's role, Finance New Orleans' role inside the pilots around the mandatory inclusionary zoning part are a part of that. This is moving to small, but those are for larger projects, right? 10 units and above. Right. The text amendment is for smaller projects, 9 units and below. And so we're starting with incentives. So giving people, and we've been working on this in pieces, despite some of the overreaction of some of the neighbors who will be impacted. We've been working on this for quite some time, putting things in place, like, and we're talking about fourplexes, right? So where fourplexes are allowed, instead of having a developer or an owner to do a conversion or a rehab or new construction, go through the conditional use process, they will be granted by right the ability to go to where fourplexes are allowed. Again, it's not in places where fourplexes are not allowed. Is where the zoning allows for it as a conditional use. It will be available by right. And as long as one of the units for a fourplex, and it's a little bit higher for when you go up to 9 units, I think it's 2 units, are affordable for people earning 80% AMI and below for 15 years. So the affordability is not just affordable the first minute, it's going to be affordable for 15 years. So we're really pleased about that, despite the overreaction of some of the opponents and conflating it with other issues, like, you know, the management of short-term rentals. Short-term totally rentals are, it's not just it's totally different. It's just, yeah, it's not, if this allows someone to build a short-term rental and an affordable housing unit, A, personally, I am fine with that. And B, that's because the policies that the city council already put in place allow for it, not because of anything we did yesterday. So,
right. So interesting question is, I mean, in my mind, the zoning requirement provides clarity with regard to at least some of our activity, right?
Correct.
Right. Which I think is good.
And we could, Finance New Orleans could be involved in this, because you could, someone could assemble and bring to Finance New Orleans a infill project, which will have multiple sites on it, or they may subdivide a larger parcel, and that this might be necessary. So there is an opportunity But for right now, with no money, which is good because we didn't renew the housing fund last week, with no money, the city can incentivize and require affordable housing for 15 years. You know,
Right.
so, and again, people ask questions about that. They're like, well, why aren't we doing 99 years? Well, because we're not putting up money. We don't have any money to give them because we don't have the NIF anymore. And we're not giving them any money. We're saying this is a conditional use. You could have fought the 6 to 9 months to get it and then build whatever you want. But for it to be granted to you by right, we're saving you 6 to 9 months of time, and we're still requiring 15 years of affordability. That's a significant commitment from property owners, given the fact that they are getting no cash.
Right. And there was buried in the details. Is anything dedicated towards encouraging home ownership?
So no.
You saw?
It can be done by homeowners.
Yeah.
Homeowners can do it.
Yeah.
And so, but that's also where the STR piece comes in.
Right.
The only way you could do an STR with one of these is if you lived in it, or if it was in a commercial area. And if it's in a commercial area, you're probably not looking for the zoning variations anyway.
Right.
It's only in a residential neighborhood where a fourplex is allowable, that someone could do a short-term rental if they had a homestead exemption. So you could rationalize it as saying, well, it does help home ownership. It helps, and we saw people testify about that. You've got older people who are their home is too big for them. They can't easily do a conversion because they'd have to go get a conditional use, and then it would allow them to have some revenue coming in to help them keep their home.
Yeah, I got you. Yeah, it's just that one piece that's out there that I mean, I guess the market is such and the dynamics are such that we're less able as a community to encourage home ownership, just because affordable housing is just really a bigger problem.
Well, affordable home ownership is a big part of affordable housing. People need to be able to afford the homes that they buy.
Yeah.
And that's a big problem. And that is part of the issue. Is you've got to have, you can, well, again, this project could help someone buy a double and live in it, knowing that they could rent it out if they, for example, if you're going to go buy a single family home that you can't afford, right, in a neighborhood where the prices are astronomical, and you don't need the entire square footage, you can turn it, but you need a zoning variance in order to turn it into a double or to turn it into a fourplex. This will let you do that. You can live in it. We often tell people when we talk about home ownership opportunities, oh, you should buy up a double and fix it up. That is very difficult these days with the way financing, bank financing operates. This gives people a little more breathing room. They can go to the bank and say, well, I can put 3 units in. One of them has to be affordable, but the other 2 I can rent for this amount, and then I live in the third. And all of a sudden, you've got someone who can actually make that work as a home ownership opportunity.
Gotcha.
So we are looking to home ownership, but without cash. Without cash, we need to be looking, and we need to put the cash back on the table. We need to put the NIF back on the table and get it reestablished and get it properly sized. But we also have to do other things that incentivize and allow people who want to build affordable housing to do so.
Thank you.
No problem. Anybody else got any other questions? Nope. All right. I think the next thing on the agenda is, am I mistaken, public comment?
No, there's one more section, the executive management.
Executive management report.
Oh, sorry. I thought I was skipping ahead. Sorry.
No problem, and I'll be fairly brief. There's not much update from last month's discussion. Board Member Wooten mentioned earlier the infrastructure bill and the Build Back Better bill. We're still waiting on a vote on the Build Back Better bill, which is where a lot of the impact for us will come from. We still have a shot at accessing infrastructure funds. Of course, everybody's going after those dollars, and we'll be in that number as well. The Build Back Better bill specifically lays out funding for green banks. And of course, we're a part of the American Green Bank Consortium. So we're going to keep a close eye on it individually as well as with the rest of the green banks. But that funding would give us an opportunity to scale up a lot of the work that we've been talking about today and throughout the course of the year. Also, we, of course, are closing a few projects before the year ends and a few at the beginning of the year. This is the start to what we expect to be a very active process for Finance New Orleans moving forward. We expect to always be bringing updates and production updates to the board. We're going to be focused more on production next year. There's still a lot of infrastructure that needs to be built within the organization. However, we are starting to see the light. We're starting to generate revenue. We're starting to deliver value to projects that need them. So next year, our focus is going to be producing more and evolving the products that we do have and building out products that aren't on the market just yet. Last week, we held an investor reception. We reached out to a number of our local stakeholders, commercial banks, investment banks, tech companies, even some investment funds that we've been working with for a number of years at this point, trying to get them to buy into our vision. And now that things are starting to come together, we're going back to that group. We're asking them for, one, support on our strategic initiatives, and two, we need funding. We need capital in order to make this business model work. And there are different layers and levels of capital that will be needed. So we had a really good turnout. Some of the staff got a chance to spend some face time with those investors, talk to them about our plans, make some connections. And I thought it was a very fruitful event. We're preparing to host our larger annual investor event this coming April. We're starting to get the pieces together for that, and it'll happen around French Quarter Fest. And then as it relates to the numbers in production, it hasn't been much change from month to month, but we're rolling into next year, like I said, with an eye towards production and ready to deliver more impact and value to the community through our programs. So I just want to take a moment out to, number one, commend the board for trusting in us to make the investment in bringing on the staff that we brought on earlier this year and last year, right before the pandemic started. These investments are really starting to pay off. We have a long way to go, as indicated by our break-even analysis, but we're moving in that direction. We're moving in the right direction. So staff has been really coming together and gelling. Everybody's starting to understand their roles. And going into next year, we have more clarity than we have, I would say, than we have at any other point during my tenure. We have more clarity on what we need to do as an organization. So everybody's focused on execution and coming back to the community with better results every month that we come see them. So I just want to thank everybody for their effort and thank the community for staying involved. I expect that we're going to have a much more crowded room moving forward. We're going to have more projects. We're going to have more eyes on us. So this was a great start to the year, and I'm looking forward to 2022. And that concludes my report. Happy holidays, everybody.
Thank you so much for that brevity there, Executive Director Burns. Does anybody have any questions for our director?
None here.
Okay. So thank you guys so much. And then I can't see the agenda anymore because my thing kicked me off, but you guys can still hear me. So the next item on the agenda is it public comment now, or is there something else?
It's just a public comment period, and then you can adjourn.
So is there any public comment?
No public comments at this time.
Okay, and so that I'll entertain a motion to adjourn.
So made.
Second.
We have some more reports if y'all want.
I was gonna say hearing none. Hearing none.
All right,
I move
thank
to
you so
adjourn.
much. Okay. So Commissioner Wooten made the first motion. We're going to take your motion, Hunter, as the second, And with that, this meeting is adjourned. Thank you guys so much.
Thank you, everyone.
Take care.
All right, bye-bye.
Thank you. Bye.
Happy holidays,